One of the best credits out there for low-income people is the Earned Income Tax Credit. Hi, I am Juliana, and I am an enrolled agent living in Texas. I have a background at the IRS as well as a master's in taxation. I like to cover some of my experiences at the IRS as well as some things you might experience with the IRS or in tax in general. So if any of that interests you, then come along. I wanted to cover the Earned Income Tax Credit, and this is a credit that a lot of people cannot benefit from, but this is really good for lower income people who have a job. This is a refundable credit. So this means that if you pay tax, or even if you don't pay tax, but you have earned income at a certain limit, if you qualify, you can still get a refund even if you're not paying tax into the system. There are limitations on this, and those limitations are income-based, relationship-based, married, not married, head of household, as well as the number of children that you may have. So this is something that software generally will just calculate for you, whether you do it yourself using TurboTax or H&R Block or one of the other softwares online. You can it'll automatically generate for you, or if you use a tax preparer, they will calculate this for you. This isn't something that they have to manually add in. The software is usually programmed really well, so if you qualify, it will give it to you. The IRS, if it's somehow missed, will calculate it for you as well and get you the money that you are owed. Like I said before, there are limitations on this. There is a nice chart that the IRS provides. So it phases out. So if you earn only a tiny bit of income, earned income, this is not passive. So this is like wage income, self-employment income, something that you're actively doing a job for to earn. You're not just sitting around and receiving the income like rental income or bank interest. And this is actively earned income. So if you only earn a tiny bit, then you get a tiny bit of earned income credit potentially. If you earn a lot of money, you will either get no credit because you don't qualify, or you will get a tiny bit of this credit. It's kind of like a curve. So there's a middle point depending on the number of kids you have, the amount of income, and your filing status, where there is like a high point and then it starts to get lower again. So just use the calculations the software provides. You can also look at the charts, but you cannot manipulate your income to try to get more of this credit. You just input the amount of income you earn, and then you get the credit. But this is a very good one to help out lower income people. And this is something that is high on the fraud front. So the IRS does monitor this credit. They make sure you actually can qualify to claim the children that you claim. You cannot let your neighbor borrow your kids so they can get the credit. You cannot, if you don't qualify to claim your own children, but your spouse or partner or parent can, they are the ones that have to claim the children. You can't just say, well, I'm going to do it because I want to. You need to figure out who can actually claim the children, and that's the person that needs to do it. That's the legal way to do it. People do sometimes figure out if there's two parents in the same home and they are not married, they sometimes figure out who is better, what the advantage is. And, the non-custodial parent or the person who doesn't qualify can sign a piece of paper giving the other parent the ability to claim the children that year. So there are legal ways without just, saying I'm going to do this because it's in the best interest. So definitely talk to your tax preparer, try to figure out the best way to take advantage of the credit. And keep in mind, if you are married but you file separately, you cannot take advantage of this credit.